Eddie Ghabour is with me this morning. Eddie, you're telling us that this is the strongest bull market in history. So I guess you're buying this dip right now, correct?
Well, today's dip, I wouldn't really call it that much of a dip, so we're not aggressively buying. We've had a historic 6 months for clients and their portfolios, and we sent a message to them yesterday that said it's going to get a little bit harder from here in the near term. However, when we get 2 to 4% drops, as I expect we may get in October, November, we will aggressively buy, rotate out of some of our big winners. And history is yet to be written, but I think when we look back at this AI boom, it will be looked at as one of the biggest wealth creators for everyday families, for those that take advantage of it. Right.
So you're expecting some real dips, like a 4 or 5% down at some point in October and or November. That's what you're looking at, right?
I am. I mean, we are overextended here short term. We're thankful for this big boom we've had, but we're realistic in regards to where we are right now. And I think we're going to see the VIX start to spike up in volatility as we go to October, November. But this is very short term, and it's nothing more than an opportunity for those that either missed it or those that want to rotate into other areas, because we think, regardless of the dip, that markets will be much higher when we look into the end of the first quarter of next year.
Tell me about Tesla. That stock was up 35% just in the month of September. And you think this run's just getting started. So you've got to tell us, where are we going with Tesla stock?
I do. I think Tesla, they'll have some news tomorrow about car deliveries. That'll move the stock. But the bigger story here is this is an AI play. It's not a car play. And interesting enough, Jensen, the CEO of NVIDIA, referred to Musk as superhuman when it comes to AI and how fast he's able to innovate. So that's a lot of credibility there. And so I think this stock for our clients, we've told them we expect it to be $500 a share by year end, maybe even sooner. But when we look at the first quarter, as long as this AI continues this play, I don't see why it's not easily at 600 by the time we get to the end of March of next year.
Last one. You've got a minute left before the market opens. I have to ask you, we're a downside move today. It's not a huge sell-up by any means, but is that caused by the government shutdown?
I think it's just an overbought market. History has shown that government shutdowns are actually bullish. And the other thing is, the longer they stay shut down, the higher probability the Fed's going to keep cutting rates. So I look at this as a bullish sign for this market. So I don't think it has any impact here in the near term.
All right, good to hear. Eddie Ghabour, thank you very much for joining us. We do appreciate it.